blew up as credit became less available, and you start seeing who's swimming naked when the tide goes out. And there was a whole bunch of people swimming naked. What we didn't realize is there was a naked whale, and the naked whale was FTX and Alameda.
Hey guys, welcome back to Library of Wealth. Today we have Raoul giving us his reaction to the recent collapse of FTX and why many investors are starting to panic. The crash in Bitcoin has been a significant event in the crypto space as well, but with major players like Ethereum still intact, FTX hasn't phased the dominant crypto assets. Powell discusses the significant amount of fraud that led to FTX's demise, as well as where the crypto market is headed next. He believes that with the enormous capital and lack of governance that is taking place, it's clear now that many warning signs are being overlooked. Raoul Pal will also give us his market sentiment for crypto and reminds investors of when this has happened before and predicts where we go from here. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
It appears from what we know that Alameda went bust in June, and out of that they tried to paper over the cracks with customer money to hide the issues, because it would have brought down the exchange anyway because of the tie-ups with the FTT token. And then this whole thing gets exposed by CZ, but really the market needed to know this stuff. So that's where we are now. And I know we're gonna have a lot of questions about knock-on effects of that. So I am very focused on crypto right now, as I am the macro cycle, because they've met at the important part, which is the bottom of the liquidity cycle and right on that secular uptrend, of whether it's the 2 standard deviations oversold in the log regression channel of Bitcoin, or whatever thing you want to use to show that we're there now. Now, that doesn't mean I'm saying the price needs to have entirely bottomed. I think actually ETH bottomed in June, but I don't know yet. Could it have a further spike back down to 1,000? I don't think it takes out the 700 and whatever low that we had, but let's wait and see. I think most of the bad leverage was taken out in June, and this was the final part that should have happened in June but didn't. So what are the knock-on effects? Well, normally if Alameda had gone bust, the knock-on effects would have been Celsius and BlockFi, etc. They already went bust. So we've got the knock-on effects of, FTX having bought them and then can't fund them, but I think that was a kind of known failure. So is there somebody bigger here that is yet to get knocked on? Some people have looked at the banks like Silvergate. It's possible. I don't think that it's systemic for the banks in that respect, the crypto banks. Signature, Silvergate, those two are the main lenders in the system. What I do know is there's a lot of hedge funds trapped in FTX, because FTX was really the avenue for the ability to short markets via the perpetuals. So a lot of hedge funds use them, and they've got that assets trapped, which is a situation for everybody involved. And I don't know how that resolves. I got caught out in MF Global myself. It was very similar. It took a while before we got our money back, but we got a big first tranche back. And then eventually over time, as the administrators and liquidators sorted it out, we got the rest back, but that took years. So that's one of the reasons I think the markets have been less aggressively pricing the downside. It's difficult to short the markets. A lot of the hedge funds won't use Binance, for example, because they can't get it through compliance. And a lot of the other products aren't available on the other exchanges. So it's kind of muted the market, which is why it's been so quiet. But there could be other shoes to drop.
Powell says that he expects there will be weaker growth, and that means the Fed will begin to come into the picture. He believes the most important thing to do is purchase crypto. Raoul notes that the entire financial world is short on the crypto upside, and the more prices increase and regulations shift, the more they have to be included in the crypto market. Powell says that regulations have had a bigger influence than anything since the introduction of Ethereum and stablecoins, which is why he has always been max long in his positions.
I've been around this market since 2013, and I've been through all of these, and I've seen all of them, and the sentiment is as I've ever seen it. For obvious reasons. A lot of people have lost a lot of money being caught in all of these kind of fake crypto, which is, they're centralized, they're opaque, they lend your money out in ways that you don't understand to give you a yield, which you're grateful for until you realize that you've had open-ended risk on the back of it, which is one of the reasons I've said Please don't use yield. Staking yield is fine as long as you understand that your risk is the currency that you're staking in, which is Ethereum or Solana or whatever it is. That moves up and down. You're going to make or lose money according to that. But the yield is relatively safe because it's written into a smart contract. Yield otherwise, I don't like. I don't take it. I don't use it. Same with leverage. I don't like leverage. If you're going to use leverage, and people will come to me and say, well, you said you were leveraged long in Ethereum. I used call options that had 5% of my capital at risk, and I got a wrong bet, and I lost that 5% in the call options. Totally defined risk. So it's defined risk taking, and options are great for leverage like that. They're not easily available in crypto. Where we are now is the liquidity cycle has now met the bottom of the exponential trend, the adoption trend, and that becomes an extremely interesting time to focus on accumulating crypto. We've seen hedge funds go bust. Not every hedge fund is terrible. So don't throw the baby out with the bathwater. Just realize that in FTX, there was bad management and fraud, and that deserved to go under. It did not deserve to take people's money with it. And it's horrific. And as I said, I got caught out in MF Global in the futures brokers market with something like that too. Bitcoin itself performs at about 140, 50% a year through the cycles. And yet people still want to take leverage on that because they think it's not enough money. It's ludicrous, but I can't help it. It's a degen market. And I also understand that people want to do something with YOLOing because people are disadvantaged in the financial world. They can't get access to products and markets, and crypto gives them access to like early stage VC style technology investments that have exponential upside. I really understand why people get involved, but I don't see many VC people using leverage in VC because these things are volatile. So just be careful out there. I expect machinations like this. I expect 80% drawdowns. I've had them in the past several times. I'm kind of used to it. And remember, once you put it on a log scale, those drawdowns never go to the previous low because we've got an exponential uptrend over time. So, it's really a long-term game. I'm not a short-term trader, so I can't really help with the short-term side of it. I think it's dangerous in an 80-vol market unless you really know what you're doing to be a short-term trader. But to be a long-term trader, these kind of points are really interesting. Ledger X, which was the US version, is all tied up in this bloody Sam Bankman-Fried mess. So I don't even know how that's going to work. And that's another issue for the hedge fund market. There's no option market unless you can trade offshore.
Raoul is invested across multiple digital hedge funds and has observed that many things are being overbought. Powell says that during this time in the market, it's smart to immediately seize opportunities and to not wait for new lows to come in. This week's crash brings a sudden reversal after weeks of relative stability for Bitcoin and Ethereum prices. Both tokens are now down more than 20% over the last week. Raoul Powell believes that we aren't going to retest lows based on growth, but we'll have more sideways consolidation until the rally for crypto in 2023. What do you guys think about Raoul Powell's take on the future of the crypto market? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.